real estate was always something that kept coming up. It's like you just needed so much money up front. Being a 19-year-old, almost 20, there was absolutely no way a bank was going to give me a mortgage.
Hey everybody, it's Zhen here. So glad you could join us here for this month's Prime Properties TO podcast. On this podcast, we have Arnie San Agustin here. Arnie is a agent with Remax Excel Advantage on our team that specializes in a lot of pre-construction and off-market deals for our clients. He has a very interesting investing journey, and that's why I wanted to bring him on, because he actually started investing in real estate before he actually got his license to trade in real estate. And I think that's a kind of give you a different perspective on how a lot of people are perceiving real estate investing. The crazy thing is about how his story, how he got started from like flipping shoes, concert tickets, rims and tires, and having all sorts of jobs. We even go over in this podcast where he talks about how he's had almost 20 types of job, and he's still very young right now. He's just 25. So I hope Arnie's story kind of gives you inspiration to actually take action in real estate, because Arnie got started at such a young age, and all his motivation was he wanted to be a millionaire. And I think a lot of people can relate to that if they wanted to create some kind of wealth. So I hope his story resonates with you and inspires you to take action. And I hope you guys enjoy this episode of the Properties TO podcast. Talk to you later. Bye. Good day, Toronto. Welcome to another episode of our podcast of Prime Properties Podcast. On today's episode, we have a special guest, Arnie San Agustin. He is working on our team as a real estate agent. He specializes in pre-con and off-market deals. And I wanted to bring him on because he has a great investing journey, because one of the greatest thing about him is he got started at a very young age. So I want to kind of bring him on to share the story so that let you guys know that anyone can invest in real estate and it can make a big difference to you and your future. Okay. So say hello to everybody, Arnie.
Hey, how's it going? Thanks for having me on the podcast, Zhen.
Yeah, for sure. Thanks for coming on. So why don't you tell us kind of about how you got started in real estate investing?
Yeah, absolutely. So it started maybe 2015, 2016.
Yeah.
I, at the time, was at U of T and was making the transition between either continuing my program or switching entirely, like career-wise. I just wasn't really happy there.
What were you studying at UT?
It was psychology.
Psychology. Okay.
Yeah.
And what were you transferring to?
It was going to be either real estate right away or business administration.
Oh, you're going to go into real estate right away.
Yeah. And there was like a kind of a point where I just wasn't sure. And at the time, I just felt like I wasn't ready. Yeah.
You know, I think that's like normal too, because like I had no idea what I was doing in university.
Yeah.
I was just trying to.
Yeah, that was me.
That's so bad. I was
looking
like,
at my marks, like, yeah, no.
No, it wasn't even that. I was just like, I didn't know what to do. Like the guidance counselors were not useful in high school. And I was just like, all right, I guess I'll try to be a doctor. Did science, wrote my MCAT, organic chemistry destroyed me. And I'm like, oh, I guess I'll try a pharmacy. It didn't work out too well.
Yeah, pharmacy was actually what I was leaning towards if psychology ever took off. Or like that whole life sciences at UT program took off.
Yeah, for sure. I think it's one of those like immigrant things where it's like you want like good paying job. So you like, it's accounting, engineering, doctor, or lawyer. And otherwise just like, yeah, why bother going to school, right?
Yeah, 100%.
Yeah.
Filipino, like nursing, doctor. That's like, those are your paths.
Healthcare. Yeah, for sure. Yeah. So after leaving UT, where'd you go afterwards to finish your program?
So yeah, dropped out of that, and it was between real estate right away or kind of like learning more, I guess, like the fundamentals of business. And so I decided to go Humber for business administration. Again, didn't really like that, like in hindsight, but I really just used that as a buffer to kind of like buy time and figure out if I really wanted to do real estate.
So you eventually graduating, which is when we met you, then you became, started doing real estate, right?
Yeah, that's right.
So you said you started investing in 2015, 2016. What made you to start investing, and what was the first property you bought?
Yeah, sure. So 2015, 2016, deciding to drop out of UT was a pretty big thing. And like, for me, it was more of an ego thing. It's like, okay, if this isn't going to happen, I got to make something happen. So
I'm sure your parents loved it.
Oh no, it was brutal. They're just like, well, no healthcare, what are you going to do? But yeah, I decided to kind of like spend the next 2 to 3 months where I wasn't in school. So that summer, looking up ways to make money. It was like as basic as a Google search, how to make $1 million. And so I came across.
What was the first hit you got?
Honestly, I can't remember, but it was probably a pyramid scheme. So it was like stocks, trading Forex, day trading, drop shipping on Amazon, which I kind of tried. And then, real estate investing, obviously, just like you need a lot of money for that.
Yeah.
Well, yeah.
It's a good start.
And
How into the other options did you look into? Because like I know I looked into other options too before I got like started with real estate.
yeah, so I went as far as opening up like a self-directed TFSA with CIBC. Put I think it was only like $3,000 into it, which at the time was a decent amount of money, but like
It's a
nothing
lot of money.
substantial. So like if the goal at the beginning was how to make $1 million, $3,000 wasn't going to do it. So
Unless you're buying like penny stocks and they're like doubling every day.
yeah, and I just didn't like, it was just ignorance. I just didn't understand the market well enough to kind of have that confidence.
Yeah.
So I tried that. That was
Did
open
you
for the last.
did you make any money?
Uh, yes, but like not substantial.
Mm,
It was like, yeah, maybe like an 8% return.
it's not bad. Over how long?
That's the kicker. It was like 4 years. So it was just like
Oh,
I made
so
money. So basically, I didn't lose money. Is essentially like how you should put it.
so inflation. You
Yeah,
made your inflation money.
exactly. Yeah,
Okay, that's not bad. You didn't lose
yeah.
money.
The best one was the weed stock at the time. So like that was
Wait,
really
stop.
the only thing that kind of like carried that. Aside from that, I was like had no idea what I was doing.
Got it. So you got lucky and you made inflation money.
Canopy Growth Corp. That was
Kind
it.
of cool. I remember years ago. Yeah, people were telling me to buy wheat stock, and I just didn't understand it, and I didn't do it.
Yeah.
Yeah. So what else did you try? You were saying drop shipping.
Yeah. So Amazon, if you order product from like cheap suppliers like Alibaba,
Yeah.
you can like resell it on Amazon and they'll fulfill the orders.
Mm-hmm.
I didn't go as far as using Amazon, but there was a website that if you bought cheap ink and like toner for printers, they would just buy it off of you. So I was also working at Best Buy, oddly enough, and they had an auction website. And they'd have all these printers and inks. And I would just buy all of them
Yeah.
and try and sell them to the other company. And that didn't work well either. There's
That
just
didn't
like
work
not
out.
enough. No. After shipping costs, it was like, all right, thanks for the 20 cents and all my effort.
So not worth your time, basically.
Yeah, essentially.
Yeah. Okay. So how did you end up saving money for your first property?
Yeah. So all throughout high school, I think a big motivation at that age was owning a car.
Yeah.
So I would buy like rims, tires, more notably concert tickets, and like
Con-
each weekend go Friday, Saturday. So 2 events and just buy like whatever my credit card could max out at and just flip them. Because at the time, like a lot of concerts would sell out.
So like you would buy tickets and then go to ACC or Scotiabank Arena now, and there's like flip the tickets.
Yeah, essentially just scalp them. But usually it would end up being sold before the day. So it'd be on like Kijiji, like days before. Yeah. So it wouldn't be like so high pressure.
So you were doing this in high school.
Yeah, high school and then more so first year university. Because like
Wow.
that's when like the 19 events start going, right?
19 events?
Like the 19 plus events. Before it was just
Oh,
like
I
general
see.
admission. Yeah.
I see. So you could have flipped earlier, but then because you were not 19 yet, you couldn't buy the tickets.
Sure, yeah. Well, like I could have bought them. It's just like I did that. Yeah.
I see. That's interesting. So were you making good money flipping them?
Decent amount for that age. Yeah. I was also working part time, like a lot for that age.
This was at Best Buy?
Freshco, grocery store, and
Freshco.
Restaurants, like washing dishes, really simple, basic jobs.
Yeah, like entry level jobs, right? And then you kind of saved up everything and then you put into your first property?
Yeah, literally everything. Yeah.
So what was the first property that you bought?
In 2016, this is like kind of at the end of starting all these like different things, like trying the drop shipping method and like putting some money into stocks. I was like, okay, at some point I'm going to need to have a place to live. Like I don't want to live with my parents for the next 10 years. And then also real estate was always something that kept coming up. It's like you just needed so much money up front. Being a 19-year-old, almost 20, there was absolutely no way a bank was going to give me a mortgage. So unfortunately, so I actually met someone and they were explaining how pre-construction works, where you kind of like have these structured deposits one at a time, and you don't necessarily need the mortgage right away. So I was like, okay, great, let's do that.
And then you buy your first property. What was it?
Yeah. So Allen and Eglinton, it was by Empire, and it was Midtown. It was a 1+10 for 288,000.
288,000.
Yeah.
Oh, how big was it?
Ooh, just under 600 square feet. So it works out to, I had some notes before this.
Okay, yeah, good. Let me know. What's the price per square foot just for some?
496 per square foot.
Crazy.
And at the time, I was incredibly hesitant because if you looked at the area 5 years ago, you're like, why? Because you just like up $100, $200 more and you have downtown Toronto.
Yeah. So why did you pick that area?
Honestly, like, hey, I could like come up with some like genius way as to, like why I picked trans and all this stuff, but it was
Hmm.
just like I just decided like, okay, like seems affordable. Let's just pull the trigger. Like fundamentally, it's like you have the Eglinton West Station 5 minutes away. LRT was like in talks about being built. I'm pretty sure it was under construction, but nothing happening there yet.
Yeah,
So it's
I
like,
think it
okay,
was.
there's some upside. I didn't know what upside was at the time, but like,
Yeah, because that's a real estate term.
yeah, there's definitely potential for growth. But
Yeah,
yeah, no, at that age, it was definitely just kind of like
just winging
picking
it.
something and going. Yeah, exactly.
Yeah.
Essentially, that's what it was.
I think the crazy thing is like you had the like courage to go and do it at 20 and just buy something. Whereas even you know right now where we have a lot of people like we're just over analyzing the numbers. So like, oh no, it doesn't meet the 1% rule. Oh no, it doesn't do this. And it takes them forever to buy their first property. Whereas you're 20, you're hustling, working restaurants, bagging groceries, if that's what you're doing, flipping concert tickets, selling rims, and then you save everything up and you just put into this.
Yeah, I mean, like it was never planned to kind of go this way. It was just like I just like found that inherent like fun, I guess, or
Fun.
like need. I don't know what you would call it, but it was never like, oh, I want to be an entrepreneur. I'm gonna start doing this. It's just like there was like an opportunity, and like seeing it kind of come together was interesting to me. So yeah, that's kind of why.
Yeah, I think for those of you who don't know, like we hired Arnie a while ago. I think it was almost 2 years now, year and a half. And
Yeah,
I was just kind of inspired by his like entrepreneurship because he told me like all the crazy things he was trying to do. And the ironic thing was, at the time, our company was hiring for an assistant, and we had these like really really weird questions that we would put on the resumes for like I guess the application, and we would make sure that you wouldn't actually get an interview unless you answered these questions. And these questions were like, if you were a cookie, what kind of cookie would you be? They were just like
yeah.
really
It's like, what's your
random
favorite
questions.
movie? And I like remember reading that. I'm just like, what?
It was just basically like a screening thing to make sure not just like blind sending resumes, right? We want to make someone who actually read. And
Hmm.
I interviewed Arnie and I was like, okay, hey man, you are definitely not like made out to be an assistant. And I was like, just go get your license and then start trading in real estate. So that's how I met him because I was just like, wow, this guy is a crazy entrepreneurial. And the fact that we were at an investment brokerage and he already had multiple properties at such a young age, I'm like, okay, he knows what he's talking about. He's been kind of, it's kind of like you were destined to do this, even though you didn't know you were going to get into this field.
Yeah, it just kind of like led that way, I guess. But
It's
no,
nice
yeah.
because like you can look back and you can connect the dots, right? Because like I had never
Oh,
wanted
for
to get
sure.
into
Yeah,
real estate. I was
yeah.
like, real estate, ugh, I hate it. I don't
Told
want
me
to see
5 years
people.
ago, I'd be like, I don't have money for that. What do you mean? It's like, yeah,
Yeah. So
yeah.
what do you think your Allen and Eglinton condo is worth now?
I would say like very conservatively, like 900 per square foot.
900 per square
Like
foot.
that's very conservative.
So it's doubled in price since you bought it 5 years ago.
Yes.
Yes. When are you closing on it again?
It was supposed to be actually last week. It's been delayed 2 years. And so you can never really plan for these things, which I've learned firsthand. But it's
Yeah.
been delayed for 2 years. It's supposed to be May, I think, 6th. And then obviously with everything going on in the world, it is
Yes.
now TBD. So we'll see, hopefully a month or two.
Yeah. Okay. So where were you getting the balance of your money for like your subsequent deposits?
Yeah, so at that time, I was just before my 20th birthday. So me and my friend had started a landscaping business.
20th
Like,
birthday. So you've done
sorry?
so many things already when you're 20, and then you had a condo, and now you're starting a business when you're 20.
Yeah, but like the whole like this whole process, it sounds like a story that I tell when I'm like 10 years old, because I'll get into it. But basically, me and my one friend, we were trying to find jobs where we could work kind of like on our own hours, strictly because school was such a like a demanding need,
Yeah.
especially at U of T.
Hmm. Okay, so
So
you were starting this business while you were already at U of T, right? So like this is your first phase of university or
yeah.
post-secondary. Got it.
Hmm. So like kind of just like working on the weekends or before classes or after classes. Anyways, we came across like lawn maintenance, just cutting grass, simply because like we could take a old lawnmower that my friend had. I was like 10 years old, throw it in the back of my mom's like SUV and just drive to houses, do our thing, and then be done with it. Like don't have to worry about.
So how are you guys getting to these like clients or like people's lawns you were cutting?
Yeah, so we spent like 2 weeks coming up with a name for the company because obviously everyone knows that's the most important
Always, yeah. The
part.
name's the most important. 2 weeks. The
Yeah,
name, and then the slogan, and then the
yeah,
logo, and then the
the
color
logo.
takes like
That
four
no
weeks.
one. So that was like the first lesson. None of that really it matters, but there's definitely better ways to spend your time at that
Yeah,
early stage.
yeah, exactly.
Um,
Agreed. But it's like things you have to learn, right? It's the things you have to learn.
Oh yeah, but yeah, it's funny. So yeah, we would print out all these flyers, and his aunt worked at an office, so like
Yeah.
no printing fees. We just kind of like steal their paper, whatever, and we'd start handing them out at like neighborhoods and like knock
Hmm.
on doors. As like random as that sounds, that's what we did, and that's why I feel like it sounds like it's a story that I should tell from when I was like 10 years old, because I was like 20 years old doing this, but it worked.
Wow. Yeah,
Yeah.
I mean, like you have the hustle, you're not afraid, right? Like I know when we were doing training for real estate, everyone was like, "Oh, how do you get clients? How do you get clients?" And everyone's like, "Just door knock." And everyone's like, "Oh my god, door
Yeah,
knocking!"
it is
I
really
get.
like intimidating. It's just, like if someone comes up to my door, it's like, what do you want?
Yeah, but that's for your side. But like, imagine you're the one knocking, right? And people are just
Hmm.
afraid to do it. I think a lot of it is just like once you start doing it, it becomes normal, right? And we talked about this before too. But I
Yeah.
think a lot of people are just afraid to make that move, kind of like with you, and just like, oh, real estate. Okay, this makes sense. Let's go.
Yeah, yeah. No, for sure. Yeah, there's a lot of like overthinking you can get in your head for sure.
Oh, 100%. So how long were you doing the landscaping stuff for?
So me and him did it for about like that entire summer, and then he found a much better job that was a lot more stable.
Yeah.
Because at the time it was strictly Kijiji leads and kind of referrals, so we'd only have like 3 or 4 jobs to do each week, sometimes like
Hmm.
2 a day max, and that'd be great because then you just save time and efficiency that way.
Yeah. Yeah.
Uh, but that continued on until just about a month ago.
Yeah. Yeah.
So yeah, so maybe 4 years, 4 years now.
4 years. So you've
Hmm.
had this landscaping business for 4 years, and that was kind of providing for all the deposits for your first property, right?
Yeah.
Yeah. Did you ever work anything between graduating and kind of becoming a realtor, or were you just always doing landscaping during that time?
No, so throughout school, I always had that like part-time job, because when I first picked up that investment property, it was like, okay, this is all good and dandy now. Like they didn't even ask for mortgage pre-approval at the time, which
Oh
was
yeah,
odd
the
to
good
me.
old days.
Yeah, it was so lenient. It's just like just sign. I remember it was like, what's your occupation? I was like, student, and I think I was a lot more nervous than the actual agent for the deal not closing, because I
Yeah.
felt like they were gonna come back and be like, yeah, no, this isn't gonna fly. You definitely need to show that you make money. But I've always had part-time jobs in between, just in case I had to show on like paper, like a T4,
Hmm.
because the landscaping business was cash. Flipping items on Kijiji was always cash.
Yeah, you can't really report
Um,
that on a T4.
no, yeah, unless you
I mean,
can.
I guess you could. I don't know, but we won't get into that.
Yeah, kind of okay. But yeah, everything from like being a security guard, working
Mm.
at like bars and clubs as like a busser, just again like the cash tips, but then you also have the T4 aspect. Working in office admin, Best Buy, warehouses, landscaping companies, building things. There was a
How
lot.
many jobs do you think you've had, like different roles? Like I'm just like
I
I'm
actually
losing
went through it
track. Okay,
the other
let's
day.
count it. Okay, so I got
No, we're not going to count it, because
no.
but it's like
Oh,
over
okay,
20, easily
over
over 20,
20.
easily.
Oh my
It's probably
goodness.
more, yeah.
Oh my goodness. Okay,
But it
so
was just like short periods of time. It was like 4 months, okay, 4 months, and like yeah.
do you think you just didn't like those roles because it wouldn't like kind of fit in your personality, or you just kind of moved on with it because you were just bored?
It was definitely just bored. Like you
Yeah,
kind of learn the ins and outs, and it's like, okay, like this is how it's run, or like this is what I'm doing. Like, okay, let's try and like level up in a sense. Yeah.
and it just basically wasn't challenging enough for you, right?
Yeah.
Yeah, yeah. Okay, so
Hmm.
that's how you got number property number one. I know you got a couple more. So can you talk about how you got into your next properties?
Sure. Okay. So I've actually been through the process 4 times,
4 times, yeah. Okay.
despite only owning two. So
So
obviously
so
some
so
mistakes
for the
happened along the way.
yeah, yeah, for the record, can you say how old you are right now?
Okay. So I 24, turning 25 in June.
Okay, it's
Yeah.
24 turning 25 in June. Okay.
It
Got it,
is
got
a
it,
few
got it.
months away. Wow. Yeah.
Yep, almost. So
Okay.
second property.
So second property was more with the family, less me,
Mm-hmm.
but they were going to invest in Vaughan, and the project was called Cosmos by Liberty. It was supposed to be
Oh
like
yes.
8 towers. Yeah, the infamous cancellation.
Yes, 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 yes.
But at the time, again, really similar price point. It had to have been under 600 per square foot, and it was going to
Yeah.
be a 1+den with parking,
Mm-hmm.
and I want to say it was like 350, like something ridiculous compared to
I
what it
think
is now.
yeah, I think that was 2017. Yeah, I think so. So
Mhm.
you're saying you got your family involved? So did you guys do like a joint venture?
No, so yeah, my dad was more kind of looking in this area just because he works in Markham, so he'd
Yeah.
always drive by the site and see that there were a lot of like signs being like, hey, like this is what's going on here. And so after going through it, I guess with me the first time and understanding the process, oh, you don't need a mortgage, you don't need like all these things, you just need the down payment.
Yeah.
They were like looking to invest in that.
So did you convince them, or did they look at you and they're like, oh, my son's made money buying this pre-construction, maybe I should too?
I don't think it was really me. It was just more, they were also looking to downsize at the time. So it's like, we don't really need a house in Brampton when
Yeah.
we're 65 or
Got
however
it.
old. So yeah, for them it
So
was
that's
more
first
like,
number one.
yeah.
Well, that was number two, but number two doesn't really exist anymore because of the
No, because
shenanigans that
it got canceled. Got the deposit back. I'm not even sure if they got interest, but got the deposit back. So there's no concern there, but it's just opportunity cost.
Yeah,
So it's like
opportunity
3 years
cost.
of wasted time.
Yeah. And imagine if it was actually built, right? Like if you bought for 350, I think the 1+1s now are trading at like close to 550 with parking.
Almost 900 per square foot, I'm pretty
Yeah.
sure. Yeah.
So that would have been like almost 60% increase.
That one
Okay.
hurts. But
Yeah.
moving on.
Yeah. That one hurts. Yeah. We had some stuff there too. And yeah, we're not going to get into the stuff, but yeah, it was just
It
just a
happens.
bad
Yeah,
one. It was
life
just a
happens.
bad one.
Yeah.
Yeah. Stuff happens. So how'd you
Yeah.
get into property number 3?
Okay, so this is a third one that also failed. But shortly after that, the same agent that sold me the one at Allen and Eglinton, so the first one, reached out again. He was like, "Hey, there's a unit that's coming, or sorry, there's a building. It's called Axis at Jarvis and Carlton, built by like a very like new developer, but they have kind of a history of working with these large companies. And so that was going to be a 1+ den, 2 washroom, where the den was usable as a second bedroom.
Yeah,
In hindsight,
standard
it
center
really,
court stuff.
yeah.
Yeah.
When you see the building, it's like, that's a stretch. But at the time, it's like, okay, like this is a great investment. But it was the 44th floor, and it was for 450.
Seems like a steal right now.
Seems like a steal. At the time, it was like, what are we doing? Now we're definitely overextending.
Yeah,
because you couldn't really tell, right? Like you could easily say, oh yeah, like I thought all of this through, but like realistically, if you bought in 2015, 16, or 17, like right now, you're pretty much laughing if it's built.
Yeah, if it's built or being built, right? Yeah.
Mm-hmm.
So was this third property solo yourself?
So yeah, that was the kicker. I didn't have the 80,000 down payment, and so I went to go sign, and it was really just a matter of convincing my parents to dip into their line of credit, because at the time they had a house in Brampton that they bought in 2005.
Yeah.
So all this time has passed, all the equity's kind of built in. Like the line of credit was there.
Equity. Yeah, tons of equity.
The line of credit was there, but it's just I had no track record to prove that, you know what, I'll be able to pay for this when it's finally done being built.
But at this time you were working, you had the landscaping business.
Yeah, so that was all cash though. So I'd say maybe around that age, it was like 40 to 50 while in school. So it was still like a decent
40, 50,
amount,
like 1,000 in income, right?
Yes.
That's crazy. That's absolutely crazy.
There was a lot going on though, but yeah. So basically kind of, it was the 9th day of the 10th day cooling period. And my dad's like, like this isn't happening. You haven't shown enough to kind of like give us confidence to lend you out this money. Rightfully so.
It's still pretty impressive. You almost convinced them to lend you money at their
so
line
close.
of credit.
One more day. Could have trapped them into, no, that's a bad way to look at it.
Do your parents ever regret it? They're like, oh, looking back now?
No, like they know what it is. Like I know what it is. It's not really like, oh shoot, like look, see, like this is what would have happened. It was like strictly like a learning experience. It's like, okay, for sure. It was very humbling. It's like you were so close, and it's just like, oh, it just fell apart.
There's been so many of those stories where like the amount of like cooling returns, like in the 10-day cooling period that some of our clients have, I'm like, it's a good idea, and they're like, no, I just can't do it. And then like a year or two later, they're like, F.
Yeah.
It happens, right? It happens.
But yeah,
so how did you get to property number 4 then?
Okay, so property 4, learned from my mistakes this time, and by this time, the first one wasn't entirely sold out. They were still selling, I think it was 4 or 5 units. And
this was Allen and Eglinton, right?
Yeah, so the builder reached back out and they're like, hey, we have this 1 bedroom plus den. It's a bit bigger than yours, but we're charging 600,000 for it with parking and a locker. And you kind of see that number and you're like, wow, like I am a genius. I am a real estate master, which is like really not the case, because the more you start to learn, the more you realize, okay, like I really don't know anything. So it's just like step by step. But anyways, I kind of took that information, and one that I was keeping an eye on was one that was actually advertised a lot. So E-condos, the first tower is done. E2 was the one that we kind of bought into or signed for. Was going to be launching soon. And the best thing about that one was, again, like really close to the transit lines. So Yonge subway station, and then Eglinton LRT. and it had direct connection. So
Yeah, crazy
that one
project.
was one that I
This
tried to
was
like
2017 or 2018, I think, E2.
2018, spring of 2018.
Yeah.
Yeah,
So by the time I knew, you'd be what, 23 at the time? And
just
you,
before 23rd birthday again. So 23.
yeah. So you had,
I'm gonna keep using that.
yeah. Okay. So now
Make it
you're,
seem younger.
now you're one property in,
Yeah.
two didn't work out. And so you're on one in the books, and now you're on the
Mm-hmm.
fourth potential one. So this is your second official one, right?
Yeah.
Got it. Okay. Yeah.
So for this one, in terms of income, it still hadn't really changed compared to 2017, like Axis.
Yeah.
But what I used this time was like, hey, you know what? If I'm unable to pay it, we can just sell the very first one, and like you can just kind of like take my deposit and then pay off the line of credit that I would have borrowed. Because again, I would have needed to borrow the entire 20% structured down payment.
Structure. Oh, okay.
Yeah.
So, but you still bought it anyways because you're like, it's a good deal, or you just believed in it?
Oh, for me?
Yeah.
No. Like after kind of seeing like the four, it's like, okay, all these ones by transit seem to be doing okay. So I'm just gonna keep following this strategy.
This transit strategy.
Yeah.
Yeah, it's
And
worked
that's
out quite well if you had that now, right?
yeah.
Yeah, you can't get less than like $1,000 per square foot for near transit now.
No.
Yeah, so E2 seems like a home run. What did you buy E2 at?
So E2 was 1+10, two washrooms, and 908 per square foot. It's 575.
Crazy direct
But
access
at
to
that time
housing.
too, that was like it was like the peak of the market, I think. So it was either up or down. And so that was
So
really
why would you do it if you think it was at the peak of the market? So like $900 a square foot. What made you kind of go into it other than the fact that you thought it was transit? Because keeping in mind, you're borrowing 20% to buy the property.
Yeah. So inherently, like seeing the first one and then seeing the next two fail, I kind of saw there was like an opportunity. Okay, if banks really don't care to see like mortgage pre-approvals, I could technically just keep buying these, and like if they keep going up, I'll just sell the one and then keep going like forward and sort of like climb that property ladder. It wasn't really an investment strategy at that point. It was more just like this is working towards a house.
Got it.
Yeah. So I just kept like increasing the amount per se.
So when you bought your first one, did you ever have intentions of closing it? Because it sounded like you were just gonna flip it, right?
Oh yeah, no, absolutely. So yeah, the reason I bought the one at Midtown was strictly because in 3 years' time, it kind of worked out. Like it was supposed to be finished in 2022. So at that age, I was like, okay, I want to be working downtown for sure. So I could either live in it or rent it out. But realistically, it was more to live in it.
Yeah. So supposedly 2022. That's always supposedly.
Supposedly, yeah. They don't tell you about the 3-year delay.
Yeah, more or less.
Inevitably may happen.
Mm-hmm. Okay, so now that you have two properties in your belt, what's your plan? Like, what are you planning to do with it? Like, what's your next strategy when it comes to real estate investing? Because obviously, when I met you, you had these properties ready, and now that you're spent quite some time with the brokerage that specializes in investment, like, well, how are you going to do things differently now that you learned?
Yeah, sure. So honestly, the strategy is still going to stay the same.
Yeah.
I didn't really know what I was doing before, but now I can kind of label it. But it's really just buy, hold, let the equity build up, similar to how that equity built up in my parents' house. You have that like available line of credit to give you options. But yeah, right now the target's really just first-time home buyer friendly things that'll like move quickly.
Yeah.
And aiming for cash flow, although it's not as lucrative as it once was.
No, but definitely. Yeah. It's a lot harder to do it now. But you'll be cash flow positive on those two condos you own right now, easily.
I would say so, yeah.
Yeah. So you can always just hold on to those, right? And then tap into the equity and then buy some more.
For sure, yeah.
Yeah. So I think one of the coolest things is like when you got started early, even if you didn't know what you were doing, and you kind of benefit from the market going up. Looking back, is there something that you would do differently, knowing what you know now? It's
like I get the question sometimes from my friends, and it's hard to answer because like once it's happened, it's so easy to be like, yeah, like it was planned, like 100%. I knew what was going on, yeah. But like realistically, because I didn't know what was going on, it's really hard to say. If I did know what I know now, I would strictly focus on the cash flowing part of it. Yeah. Especially at like the prices that they were under resale. Yeah. And I think the strategy would still be the same, just like buy, hold for as long as you can, and then either upgrade up or like buy land. So detached homes or freehold, sorry. Yeah. And yeah.
It's crazy though, because like you could call it beginner's luck, or you can call it, you know, whatever you want to call it. But I think the
Beginner's
biggest
luck's a good
thing
term.
is
Yeah.
that you have the courage to do it, right? Like,
That's the biggest thing, I think.
yeah,
As
like we
like,
preach to a lot of people. It's like you can't really be trying to time the market. Like you're trying to just spend time in the market, and you I think one of the great things is like you're just like, okay, I'm brave enough to go and do this. It seems like it's a reasonable enough plan because you're ambitious enough that you want to be a millionaire when you were 19, I guess. They're like, okay, let's just go and figure it out,
yeah,
right?
no, for
Yeah.
sure. Yeah, it was definitely a learn by doing type of thing. And if I did have someone to look up to, it went a lot smoother. But yeah.
Oh, for sure, right? But like, I think that's the same thing for me. Like, you just kind of go and figure things out, and you
Hmm.
just take action. And a lot of people kind of are afraid to take that action because it is scary, and sometimes we get analysis paralysis.
Yes, yes.
Yeah, yeah,
Especially when, for example, if like you're a very early investor or first time investor, and
yeah.
you don't necessarily have that friend group that's doing the same thing, whenever you mention these big quote unquote ideas, are just different. It doesn't necessarily have to be big. It's like your friend group will sort of question it in a way that is negative, as opposed to, oh, like that's really like different. Like, how do you
Oh,
think about that?
for sure. I mean, like we were 20, when I was 20, like I was not thinking about investing in real estate. There are other things on my mind, not making money or being
Yeah,
a millionaire.
bottles at the bars.
Yeah, yeah. Imagine if you could spend all that time if you knew better, right? Like when
Yeah,
we knew what we knew now, like the money we could have put into those. Like we always joked, like, oh, if we just took the OSAP money to buy condos or buy investment property.
yeah, free
Yeah,
school
yeah.
and some.
Yeah, so I think what would you tell to like anyone who's listening right now for kind of like being on the fence, like in terms of real estate investing? Like, what is a lesson from kind of your crazy up and down journey that you can like pass on to anyone listening right now?
So yeah, tips that I'd have for anyone right now is to honestly just go for it. Just because people always talk about buying low, and we're in a pretty good example of that right now. Maybe it's not like the discount that people are hoping for, but the
Yes.
reality is, whenever things start to go south, like banks and lenders who you need the money from start to tighten up their restrictions. And so that's one thing that you can never really predict. I'll use my example. Like 2016, they never used to ask for pre-approvals and
Hmm.
things like that. So like there was an opportunity there. Now it's a bit more expensive, and now that's also gone away. So I would just say go, like start as basic as it sounds. You'll sort of figure it out as you go, especially if you have a good team behind you.
Yeah.
But yeah,
So Arnie's basically saying a good team is our brokerage, hire us, right, to help you with the
yeah,
investing journey.
AKA.
Yeah. So I think the pre-construction world like has done great for a lot of people in say like 2016, 2017,
Mhm.
right? And if you're, what are you going to do for your like next third property, right? Like now that you had two, are you still going to continue with pre-construction?
It's going to be a mix of both. So right now, it sounds aggressive, but I'm aiming for one every year to year and a half,
Yeah.
whether that be pulling a line of credit and going pre-construction so I don't need the mortgage,
Hmm.
or being able to actually get a resale because it's under market price or under pre-construction price right now.
Yeah.
That's sort of the strategy
Yeah,
that I'm going
that
to
makes a
adopt.
lot of sense. That makes a lot of sense. So, what would you say, kind of like, if you know someone's opinion is like, oh, well, you took like the riskiest move. You borrowed money to buy something, and it didn't really exist. And what if it didn't work out? Like, what would you have done? Like, if things didn't turn out that the way it did right now.
Okay, so this may be like the wrong answer to give, but at that age, at that age, honestly, so the borrowed money, I'm going to clarify that a bit. So I actually had 30K saved up.
Yeah.
That's why I was kind of like looking into it.
Hmm.
And then the deposit that was needed was 42. So it's 15% in the span of, I think it was 2 years.
Yeah.
And there's absolutely no way I would have pulled the trigger if I didn't go to my parents and say, hey, if I don't have this 12,000, can I borrow it? Like when the time comes.
Yeah.
I didn't actually need to, but there's no way I would have done that without that kind of reassurance.
Yeah.
Remind me of the question again. It was,
You so basically like, what would you have done if like things didn't go really like the
oh,
way it
right.
did right now?
Okay, yeah. So at that time, I was very, very comfortable, and this is again the wrong answer, with losing that $30,000, and I was more uncomfortable with losing my parents' 12,000 if I wasn't able to make it.
Yeah.
But my logic and the thinking was, okay, I'm making a decent amount now. If I can't pay the mortgage, and I calculated it at the time, I remember it was like 1,000 or 1,300 a month. By the time I'm like 23 or 24, something would have had to like gone seriously wrong. Like would have had to stop working entirely.
Yeah.
So it was just like, it was really just like a bet on myself that I'd be able to kind of like push through that.
Yeah, that's exactly what I was going to say. Like, you basically bet on yourself, making an assumption and then confidence in yourself that you would be able to make that money in the coming years after you graduated, right? Or like with your landscaping business.
Mm-hmm.
Yeah,
So
I think
that was the honest answer. Yeah.
Yeah, I think that's kind of the thing that I am very like inspired by you, because it's the entrepreneurship that you have, right? Like a lot of the examples I always tell people of, like, you know what, like sometimes you just have a gut feeling and just do it, and you like jump off a cliff, and then you build the wings or the plane on the way down, and you just kind of figure it out, right?
That's a great way to put it.
Yeah, because like I've done things like that before too, or like I bought stuff, or like I started a business. I'm like, yeah, whatever, I'll figure it out on the way down. And it's like when you're under pressure, the creativity and the ingenuity is just there. You'll figure a way out.
Mm-hmm. Yeah, don't spend 2 weeks coming up with a business name. Just honestly get into it, and then you'll figure out like where.
Yeah. Everyone's always too focused on the name. Like when we ever talk to people who's trying to start a business, or like younger people asking for tips, it's like, how do you want to get started? Like, I don't know what the name is. I'm like, just go get clients and then start the business. Get the revenue going, right? Get the revenue going.
You always come up with the name after. Like no one,
Yeah, exactly. Like we had so many names before we came up with like the brokerage name, or even like the prime properties TL name. There's so many, but like we had the book of business first, right?
Mm-hmm.
Yeah. Plus, I also believe like pressure builds diamonds, right? Or pressure makes diamonds, right? So
to
an extent, it's probably a good thing.
Yeah, no, absolutely. Because leave it at that. That's my comment. Yeah.
All right, Arnie. So thanks for your time. Do you have any kind of last remarks you want to leave for anyone, or kind of like anything you want to add into like the story you're sharing with everybody today?
No, that's about it. Appreciate you having me.
Yeah, for sure.
Yeah.
All right.
We'll kind of like keep you. Oh.
Yeah. All right. Thanks for your time, man.
Okay, all right.
Okay, I'll talk to you later.
Take care. Bye.
Bye.